Kirk Duckwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. 2,000 new listings. What do I mean by that, and what is the impact? We'll get into that in just 1 second, but first make sure you click on that subscribe button. We know that knowledge is power, and the more knowledge that you have about our Twin Cities real estate market, the more that you can leverage that to your advantage. Let's dive into the data. Showings per week per listing, median sale price range, 200 to 400K. Minneapolis, St. Paul area did exactly what we predicted last week, which was a slight jump back up. So it went from a 9.28 to a 9.58. Interesting side point, total number of showings is still slower than it was just a couple weeks ago. So I have put a little red box here, and the reason being is depending on which way the market goes that week, I think will show if we have truly peaked as far as our total showing activity and potentially the max craziness. So let's talk about these new listings, because this is a huge contributing factor. So we have been coming up, obviously, since the bottom in December. And this is total new listings being injected in the market, 3,124 to 4,069, 4,770, and now up to 6,659. And if we look at what has happened in just the last 7 days, we've had 1,959 new listings that have hit the market. That's in the past 7 days. This actually was above 2,000 as of last Friday. So this is that rolling 7-day trend. And I had mentioned a few weeks back that if we follow the pace of 2019, we should start to see, I said it like a million times in that video, some easing of the market. And if we look at 2019 and where we were at for this last week, it was only at 1,689 new listings. So we're outpacing the 2019 market. So it should not be a surprise if we start to see that showings per listing number start to drop off as more listings are coming in, and will then bring in that ease that I talked about for buyers out there. So as far as interest rates go, Chad Preby, our resident mortgage geek, had predicted that it may be worthwhile to kind of hold tight on locking as rates may fall, and that's exactly what they did. They dropped back. They were at a 3.18 down to a 3.13. And we may have seen our max interest rates potentially for the year. Probably not a whole lot of volatility. The correction may have come. So where does this put our market meter? Market meter is, well, still at a 10. We're only starting to get a few weeks running of the new listings at this faster pace. It's going to take some time, as mentioned previously, to bring this off. But for predictions, we may have already reached the craziness, at least across a lot of price points. You're still going to see houses out there, if priced really low, be very competitive, lots of multiple offers like we have seen, but it may not be as across the board. And those are the trends that we're seeing when we break down price points. If I was looking at the 200 to 450K range, by 50K, we're starting to see each of those brackets coming down. That said, anything below 300 in the single family is probably going to remain relatively competitive across a majority of the metro through the summertime. Hopefully you found this information valuable. For sellers out there, this is the time. If you wanted to wait until it's green, let's just say it's green enough, get your house on the market before the market falls off. For buyers, it may be time to get back involved, looking a little heavier, still talking through things. Like I say, it's still pretty extreme market, but it's not as crazy as a few weeks back. Click on that subscribe button. Take care, be safe, and have a great week.